Hello, traders. Let's take a look at the featured stock from yesterday and then let's find a new one. My goal is to set you up with some great trades, and I hope that you'll return the favor by subscribing to my channel and by posting your comments. You don't want to miss these trades, so make sure to turn on your notifications. Let's get started. We are 2.5 hours into trading on Monday, March 15th. Hello, traders. Let's take a look at some of our recent picks. Friday, I showed you MVIS. We talked about selling an out of the money naked put using the $12 strike price, expiring this Friday, March 19th, doing that for 25 cents. If you did that trade, we're in really nice shape. That will make a 10% return in the course of only a week and 2 days. Very nice return. Last night, if you watched my video, actually yesterday midday, I recorded a video and posted it to YouTube, and I highlighted two stocks. Airbnb was one of them. I love this downward sloping trend line that's been broken to the upside. Two long green candles closing near their high. Today you can see the follow through trading. We are out there trying to sell an April bullish put spread. April 16th, 170, 165 bullish put spread for a credit of $1. We have not been filled. You can see how strong the stock is relative to the market. Market is down right now, and you can see that in the right corner here. This is the S&P 500 on a 5-minute basis, and the stock is up for the day. Relative strength. Now, if we do get filled on this, it'll actually be good because we know that there are buyers for the stock. Look at how well it's holding up today. If we're filled, it will be because of a market drop today. I'm great with getting filled on that type of trade. The other one that I showed you last night was Snap, SNAP. There we were trying to sell on April 16th, 48, 46 bullish put spread. Excuse me, 58, 56 bullish put spread for a 40-cent credit. Look at that stock. Again, market down, tech down. This stock is barely down from its close on Friday. This massive volume right in here was the clue. I also showed you an option lottery trade that we did right in here with minutes to go until expiration, buying the $61 calls. Look at that stock. It shot all the way up to $64. So what do we got going on today? What's the market look like? Not very strong. You can see we had an upward sloping trend line right here on a 5-minute basis that was broken. We had this nice 10P bearish cross. It came into play right here. Market rallied a little bit and then finally broke down. Two long red candles closing on their low. Now we've got a couple of longer green candles that have been able to eclipse the open of that long red candle. What would I do here? We're going to see a bullish 10P cross in here. After a couple of really long red candles like this, I would want to see a bottoming process. This tells me that there are sellers. So market comes down, chops around. We start spending a half an hour making a low, and we make a higher low for the day with a bullish cross here. Then I think it's safe to go in and start buying stocks. This is choppy price action. If you take a look at this, you see a mixture of green and red candles, nothing organized. A little bit down, a little bit up. This is the only thing that we've had that's been even remotely organized, and we're instantly bouncing in here. So we're going to be chopping around. Zoom out to that daily chart, and here you can see market tried to challenge the all-time high last week. In fact, we did make new all-time highs, and we made a new closing high on Friday, but we really have not been able to push through it. As I've been telling members, I want to see the market tread water. I want to see it stay close to the all-time high for the next 3-4 days. Why? Because all of this price movement right in here has been influenced by a $1.9 trillion stimulus bill. That's going to keep profit takers at bay. That's also going to keep short sellers at bay. Who's going to want to short the market when they know that there's a $1.9 trillion stimulus bill? The answer? No one. So this has been more of a seller's boycott than anything, although we have had heavy volume on the way up. Let's see what happens. Now that the air has been let out of the balloon, that stimulus bill was a catalyst. Let's see if the market can hold its bid. Stock valuations, fairly rich. How quick is the economy going to rebound? Many analysts are now projecting that we are going to rebound much faster than the market is pricing in. And we've also seen a sell-off in TLT. That's the U.S. Treasury 10-year. You can see today, U.S. Treasuries are actually rallying, and the market is down a little bit. So we've got a little bit of a disconnect in there. You can see S&P down, TLT grinding higher. Take a look at that daily chart. You can see that it's still been pounded down. We're looking for that support on TLT. I believe that the market could be in a wait and see mode right now because we have the FOMC meeting on Wednesday. And that means that traders are going to be dissecting every single word that Jerome Powell says. Any little hint that the window for tightening might move up will be felt by the market. So if their expectations were no rate raises until 18 months, and now it's, well, we think that a year from now we might have to tighten. Even that will have an impact on the market. So we'll see what happens. Ideally, the market treads water. We're able to get through the FOMC, and then we're able to break out to this resistance level and start grinding higher. I still believe that because of higher interest rates and because of fairly lofty PE ratios, valuations, that the market is not going to be in go-go gangbuster mode. I feel there will be plenty of opportunities for us to get long in the course of the next month or so, and I still favor selling out of the money bullish put spreads on strong stocks that are breaking out. So let's look for them. Let's see what we can find today. I'm going to go right to my favorite swing trading search in Option Stalker. And we're going to click on UUU, beautiful breakout there. That looks good. I'm going to click on, and that was earnings before the open. G Pro, you can see this gorgeous breakout to a new high. Long green candles closing on their high. Heavy volume, looks excellent. In this case, I would be looking to sell an out of the money bullish put spread somewhere inside of that breakout at $11. So I don't know if there are 10.50 options available, but I'd probably want to be going down to the $10 strike price. Not a huge fan of GoPro only from a technical standpoint because it has not done much, has been very choppy. So let's see if this breakout holds. This is just zooming out on the daily chart. You can see that it has had upward momentum. Let's go into the next stock, JWN, beaten down retailer. Stores starting to reopen. Love this breakout right here. Retailers are moving higher on the notion that people are going to be spending their stimulus checks in department stores. Nice volume right here. You had earnings recently. Looks good. I would be selling a bullish put spread right below that breakout at $40 with the expectation that this breakout is going to hold. Now you might say, well, wait a minute. I'm going pretty close to the money on this, Pete. I'm only selling a $40 put. Why would I want to go that close? Well, first of all, you're not going to get a lot of premium if you distance yourself and go down to, say, the $35 strike price below this 50-day moving average. So you're not going to get a lot of premium. It's not going to be worth your while. The second thing is I'm not expecting the stock to sit here. These are two long green candles stacked. I believe the stock is going to continue to move higher. This is off the Pop Bull search. That's why I would feel confident selling a $40 put, and I would keep it in as close to expiration as you can. So try and sell an option that maybe only has 3 weeks left of life, maybe 2 weeks left of life. That way you get accelerated time premium decay also working in your favor. JetBlue, beautiful. I'd use the same premise. There you've got 2040. I would come down to the $19 strike price, stay inside of that breakout so that the stock can come back and check that support without you getting shaken out, because it'll probably check it, but it'll come in just below it. All of these computer programs that these trading firms use, they know where you're going to be placing your stops, and they try to shake you out of these good positions when possible. So by staying a little bit inside of that, down here at the $19 price level, the 1918 bullish put spread expiring April 16th. I looked at it. You can't quite get 20 cents for it. I think it was 15 cents bid. I would want to get 20 cents for that spread. I think that's a nice one. So JetBlue selling the 1918 normal April expiration bullish put spread for 20-cent credit. I like it, and that might as well be the trade of the day unless I see something else that I really like. You know that I like MGM. I highlighted this one last week. We were keying off this technical breakout right here, trying to sell a $35 bullish put spread. Nice compression, breakout, see you later. NEM, gold stocks catching a bid today. Not going to touch gold, pretty volatile. DAL, Delta Airlines, similar to JetBlue, same type of strategy. Expect that breakout to hold. This now becomes support. Keep your bullish put spreads inside of that $49 price point, maybe a $47.50, $45 bullish put spread. If you don't know what I'm talking about, make sure that you learn how to sell out of the money bullish put spreads. It's a great strategy right now. This is a bellwether strategy. You can go to www.optionseducation.org for free educational information on how to sell bullish put spreads. It's also known as put credit spreads, also known as selling vertical put spreads. So make sure you understand that strategy. It is a really good one. SONO. There's your flagpole. You can see the earnings reaction, very positive. There's your dip. Got a bullish flag formation here. Stock continuing to move higher, break out to a new high. SONO with great relative strength. And there you'd have to key off of a $40 price point, expecting that to hold and expecting the stock to follow through on the upside. ABBV, you know I like this one. Here we were selling a couple weeks ago. I highlighted this when we were trying to sell a 102.50, 100 bullish put spread when the stock was still down in here, about 3 points out of the money. Told you I liked it. There it goes. It's starting to get through resistance right here on its high. Click on the 5-minute chart. Take a look at that relative strength. Overlay the S&P 500 so that you can compare the two. Here you've got market down, down, down. Stock compressing, holding its own. As soon as the market comes back, whoosh, it's going to be off to the races. That's how all of these work. I'll just click through a few more of them. DAL, JWN. There you can see. Look at that relative strength. Market down, stock up. That is our edge, and we work it every minute of every day. It works on a 5-minute chart. It works on a daily chart. That's why the picks that I show you every day have such a high success rate. Relative strength 30. These stocks have been strong over the course of the last 30 minutes. When the market is down like it is right now, that's the search that we want to go to. Hey, the market's been selling off. Well, which stocks are rallying? How about TDOC? Hey, look at that. Choppy stock, but moving higher. You've got the market selling off. Stock dips a little bit, but boom, right back on the high of the day. Look at that daily chart. You can see it's been bottoming pretty hard in here. Before I would want to swing trade this stock, I'd probably like to see it get through that 200-day moving average. Doesn't have to get through the 100-day, but I'd like to see it move through that 200-day. Then I would feel better about swing trading it. I might even consider selling it out of the money bullish put spread. That's all I've got for you today. Look for a choppy day today. Look for quiet trading into that FOMC statement Wednesday. We'll see you tomorrow. Thank you for watching this YouTube video. I'm Pete Stolzers, and I'm going to keep the trade ideas coming along with lots of education, so make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.